Hello and welcome to Car Dealer Live. I'm James Baggott. I'm the founder of Car Dealer Magazine. Today we're talking the very latest on used car prices with Derren Martin, Director of Valuations at Trade Price Experts, Cap HPI. Derren, good morning to you. How are you?
I'm very well, thanks. How are you?
Very good, thank you, Derren. Thanks for joining us. I mean, last time we spoke was back in April. The headline figure then was a 1% drop in values, but actually the second best April ever recorded. What's it looking like in May?
Yeah, it's been more of the same, really. So May, we've got a drop of 1.2% at that headline 3-year figure, which is you can't, when you look back historically, you kind of got to ignore the last 3 years because we've had sort of real stable last year. The year before that, values were crazy. That's when they had those incredible increases, and the year before that was the COVID year, where everything was just reopening up. But if you look back historically beyond that, this is actually one of the strongest Mays again. It's stronger than sort of all of the last years going back to sort of 2013, if you ignore those last 3 years. So with an extra bank holiday thrown in, I think there was a little bit of trepidation about how the month was going to go. I would call that relatively stable, really. We're getting back into more seasonal happenings of values going down slightly. We've kind of been a little bit immune from that for the last couple of years. So what we've seen is a little bit more of a normal May, really.
So what would we normally see in May? What sort of drops would we normally expect?
So the average over those sort of 7 or 8 years pre-COVID was 1.8% drop. But within that, we've seen a 3.1. We've seen a sort of a 2% drop. So for it to be 1.2 is definitely on the strong side. And so it's a healthy month. I would say probably the retailers have maybe been a little bit disappointed with how the bank holidays have been for them. When we spoke to them in the build up to them, they said, yeah, can bring people out to sort of browse the forecourts. I think they've probably all been a little bit disappointed, but we have seen a little bit of an uptick over the last sort of weekend now that we're getting back into a bit more of a normal cycle of working weeks.
And just before we go into the detail of what is going up and down, what are you hearing from those dealers? I mean, we're obviously you're talking a little bit in detail about May there. What are you hearing about the actual market in general? I mean, the dealers I'm talking to are saying it's actually depressed a little bit since April. Quarter one was really strong, and actually as we've come into quarter two, it's dropped off a little bit in new and used car. Are you hearing the same?
Yeah, definitely. I think when you go back to sort of you look at December, there was a little bit of trepidation about how the cost of living crisis, how the start of the year was going to be, and it surpassed expectations. It was January, February, March. We put values up in all of those 3 months. There was plenty of demand from the consumers, and then obviously from the retailers replenishing their stocks. Then April hit. You get more cars coming back into the market from March, although still not to pre-COVID levels. You've got Easter, which is always a bit of a watershed, a couple of the bank holidays, and then closely followed by bank holidays in May. So yeah, it's definitely slowed down a bit, but that is a seasonal occurrence. As the weather improves, people start to look at holidays, people do other pursuits. It's not as buoyant as those first 3 months. So I think overall we've had a strong start to the year still. I mean, we're nearly halfway through it now, aren't we? But we've had a strong it's been a strong few months. But yeah, the last 2 months have definitely been weaker than the first 3.
And what's the story with electric cars? I mean, it's been the topic that's dominated the headlines for most of this year and actually the back end of last year. The drop off in used EV prices, is that still continuing?
It is, yeah. There's different ways of looking at it. We've got a 4.1% drop on EVs at the 3-year point, and slightly less than that at 1 year, but still sort of between £800 and £1,000 on average drop there. But it's a bit messy, that EV market now, because you've got different models behaving in different ways. Whereas over the last few months, most things have been dropping, and dropping quickly, as you said. I mean, 30 to 40% down over that period now. But what you've got now is you've got vehicles like the Model 3, Tesla Model 3, Tesla Model Y. They've actually been stable this month, so they haven't dropped at all. The Model 3 actually dropped at the start of May, and then we've put it back up again because it's recovered, and that now looks quite good value for money. Aspirational car as well. So that's kind of doing all right. But then you've got areas of the market like that are below that, like the Corsa E, 208, 2008. Those vehicles are dropping in value by sort of 7 or 8% because they're almost too close to the Model 3 now. So I think we've said this previously, that you go out looking for an EV, there are consumers looking for EVs. They may go looking for a Leaf or a Corsa or something like that, realise for a small increase in their monthly payment, they can get a Model 3 or even an I-Pace or something like that, because they've come down by so much. They're now looking quite good value for money. But some of that lower range sort of mainstream EV product is that's what's struggling.
I mean, I've seen some adverts for them Tesla Model 3s in the used market on a used PCP with £2,000 down and £250 a month. I mean, that is an incredible value, isn't it, for a Model 3? And you can sort of see why people are out there shopping for those when they compare them to these slightly more expensive cars in that EV market. What is being particularly hit then when it comes to EVs? What hasn't come down quite as quickly as those Teslas?
Yeah, so the I-Pace has come down a little bit. Most things are still dropping. Polestar is a bit of a success story. We put Polestar 2 long range is up 4%, so they've performed quite well. Obviously, it all comes down to sort of supply and demand. I think those more expensive EVs are not struggling quite as much as that sort of mainstream under £20,000 with it, within the early £20,000, because that is now competing with the more aspirational vehicles that have dropped. So, as I say, that sort of Stellantis product that has struggled. Those are the ones that have come down, and the market's kind of realigning. You look at things like so one example we've got is, say, a Skoda Enyaq, that a year ago it was £2,000 below a Model 3. It's now £14,000 above a Model 3 on a used car at 1 year old. Things like that. There's got to be realignments happening because the benchmark is the Model 3, like it or not. That's kind of become the benchmark price vehicle. It remains aspirational as well. So others are starting to sort of jostle for position in price really around that. So below that, there has to be a gap, and above that, maybe there has to be some realignment. So it's quite volatile and, as I say, a little bit messy in that EV world, but values are still under pressure. There's still more supply than demand. There's still dealers that are, whilst they are coming back into the market on EVs, they are still very wary about buying and certainly not buying in bulk. But then we've spoken to dealers that Jaguar dealers, Jaguar Land Rover, if they can get I-Paces, they're loving them because they're now reasonably priced. They can make a reasonable margin, and they're moving because they've come down by so much in price.
So are we getting towards the bottom of this downwards curve then? I mean, you've mentioned that some of these models are flattening out. Very interesting that those Teslas that you mentioned haven't been moving, actually ticked up slightly. How far are we off that for the rest of the EV market?
I think it's going to realign still. I think there's some months to come of realignment. When you talk about that Enyaq, it's so far away, and that's not the only one. That's just the example I've picked out. So I think you can't really talk about the EV market in general. There's some moves to still happen. On a positive note, the 4.1% drop is the smallest drop we've had this year, but there's no escaping that's still a sizable drop. If that was happening on its own without what's happened previously, we'd be saying it's quite a severe movement. So, but we've seen sort of 6 and 7s over the last few months. Every month they've dropped in value. Is it stabilising? I would say yes, it is stabilising to a degree, but there's still lots of moving parts within EVs and still some realignment to happen.
And that is putting off some dealers from buying EVs still, isn't it? I mean, especially when it is so volatile and very model specific, it's quite hard to buy them, isn't it?
Yeah, and the days in stock on EVs is longer than it is on petrol and diesel vehicles. So whilst there are petrol and diesel vehicles out there to buy in clean condition, they seem to be the go-to. That's the go-to fuel type still. EVs just a little bit of a risk, and if you're looking to, maybe in previous years you'd have bought 20 or 30 of a Nissan Leaf, now you're buying in single figures probably, and just sort of giving it a bit of a try, dipping back in. But there's some reasonably priced EVs out there so that the dealers can make some money on. And I think as the weather's improved, the ranges improve, consumers are they are engaging in that EV market. Electricity prices have come down, so they're probably a little bit more of an attractive proposition than they were. The sort of the mainstream press aren't focusing on all the bad news stories on EVs as they maybe were over that sort of winter period. So I think there's some positivity there, and I think that the demand needs to improve because obviously the supply is coming back. So, but I think there will be there will be a stabilization, and you could get a little bit of an uptick in certain models, as we've seen on that Polestar.
So 4.1% down for EVs. How are petrol and diesels by comparison?
So petrol and diesel are around 1% each, so 1.1%, something like that. So they're in comparison, they're performing much better, and that's a lot more normal. And as I say, on the strong side, really, for the time of year. So especially when you look at that 30% increase we had 2 years ago, and then a very stable year last year, we've reached, as we said at the time, a new level of used car pricing, and we're not really eating into that. We've got cars that are 80% more than they were 3 years ago. So there's hardly anything that is worth less than it was at the same age and mileage point 3 years ago. So we haven't had a what goes up must come down situation. We've just got a new level, and then sort of seasonal deflation now.
And just in short, why is that for those people watching this who don't quite understand why it's happened?
Well, I always say it's not rocket science. It's down to supply and demand. Demand for used cars it's a necessity purchase. People like to replace their vehicles. If it's not a necessity purchase, there'll always be a churn of vehicles, and the supply levels. So we've probably lost a year's worth of registrations from normal times. There was, over that 3-year period, and including sort of to now as well, around 2.4 million less cars registered than you would expect. So those cars are lost to the market. So the supply levels, whilst they are increasing, they're still nowhere near where they were in pre-COVID times. So it's just the supply and demand dynamics. Demand is okay, and supply is not over heavy. So that leads to sort of a relatively stable pricing market. Apart from EVs, obviously, which are coming back in bigger volumes, demand isn't matching supply. So and they were expensive, but again on EVs, and we focus a lot on it at the moment. But you've got EVs that are a lot cheaper than their equivalent petrol vehicle. So a Golf, for example, Mocha, and they're still not selling in the numbers required. So it's not all down to price on those vehicles.
Is there anything going up drastically at the moment? I mean, we had some very, very large price increases, as you mentioned there. Is there anything that's still heading that direction?
It's mainly the seasonal cars again. So convertibles slightly up, coupe cabriolets slightly up. Sports cars dropped earlier on in the month, but some have recovered. So at this time of year, that tends to happen. Maybe it started slightly later this year. Obviously, volumes of those aren't great in the market now either. So it's the seasonal cars that are going up by the most, as in that Polestar, as I mentioned as well. But yeah, generally it's sort of either stability or small movements down, but there are a few cars that are going up.
And looking ahead to June and the summer months, what do you expect to see there from the market?
I guess we haven't got the bank holidays to contend with. We've got one more to come, and then that's it till August. So a little bit more sort of stability for the retail market. June values always tend to be relatively stable. I think the average is a sort of a 1.2% drop, which is obviously similar to what's happened this month. So I think there'll be a smaller drop than that this time. I think we're into a fairly stable period, and there's nothing untoward going to happen. There's no sort of fall going to come dramatically in values. Deflation is a fact of life in the used market, and I think retailers should be upbeat, and I would say dip the toes back into to EVs as well, and we could have a little bit of an uptick on some models there, or certainly a slowdown of some of those ones that have been realigning.
And the economic picture is looking a lot better now, isn't it? I mean, the reports this week about energy prices falling drastically from July. You've mentioned how that could impact electric cars, but there's talk that we will avoid recession, actually some growth this year now. How do you think that sort of news is going to impact buyers and the car market?
It can only lead to sort of consumer confidence, and I think that the consumers they haven't been as badly affected, a lot of them, by the sort of the bad news that we were talking about 6 months ago. So I think sort of the purchasing levels are overall, so food and things like that have been maintained. So I think the consumer confidence has improved as we go into the summer. And that can only be good for the used car market. As I say, it's a necessity purchase anyway, but I think it may encourage more people to go out and purchase. So I think we're in for a relatively strong period, personally.
And have your predictions for the year changed at all?
No, we're still predicting a sort of a small some small deflation over the course of the year. But again, I think it's going to be quite stable, similar to last year. Obviously, EVs are the fly in the ointment there, and as I said earlier, there's got to be some realignment there with some of those vehicles. But overall, no, they are sort of as we were really with the forecasts.
Derren, thank you very much for joining us as always. I'm sure you'll be sharing the data with us so we can publish a story on the website with a little bit more detail on those numbers. But thanks once again for joining us.
Pleasure.
Derren Martin there, Director of Valuations for Cap HPI. For the very latest on the used car prices, you can stay up to date at cardealermagazine.co.uk and click on the used car tab at the top of the page. I'll see you next time. Thanks for joining us. Goodbye.